Hello, dear viewers, and welcome to the next episode of the series GST in Pictures, number 8. In this particular episode, we are going to cover a new topic, and that is on input tax credit. A very interesting topic. Also, if I can remind a few teachers of tax, that is basically indirect tax, we had this concept of input tax credit also in the old system, that is value added tax, prior to the introduction of GST. Now, what is this concept of input tax credit? What benefit is available to the supplier? How does this input tax credit system work? These are a few points that we are going to cover in this particular session. So overall, we are going to cover the meaning of input tax, output tax, and net tax. Then what is the meaning of input tax credit? Who cannot claim input tax credit? What are the conditions for claiming input tax credit? How does this concept of input tax credit work, or rather working of GST system we say? And then we will look at an application of a very important rule 88A in the utilization of input tax credit, and we will be solving a live problem as well. So let's begin with the concept of what is input tax, what is output tax, and what is net tax. First, we will look at the concept of output tax. What is this ideation of taxes? Now, we have already understood output tax is basically the taxes collected on the outward supply of goods. So as a supplier, when I'm making a sales, when I'm selling, or when there is an outward supply of goods from my customer, I am going to collect GST. So that amount of taxes is called as output tax. Second is, what do you mean by input tax? When I am purchasing from my supplier, I am supposed to pay tax, GST, to my supplier. I am the recipient. So as a recipient, the GST amount that I pay to my supplier, that is called as input tax. So when there is an inward supply of goods, the taxes paid is called as input tax. Then we have the next concept, that is net tax. So as the name suggests, net, that means after deducting. What is this net tax? It is tax payable to the government after adjustment of ITC, input tax credit. So here we have the concept of input tax. Whatever input tax you have paid, you can claim. If you are claiming a credit, that will be called as input tax credit. And output tax minus input tax is going to be the net tax amount. So net tax is basically the tax payable to the government after adjustment of input tax credit. So we will have to understand, in detail these concepts a little bit so that the concept of input tax credit is clear. Now let's look at what is input tax credit. Section 16, what does it say? Input tax credit means reducing your tax payable, that is net, to the government on your outward supply for the input tax already paid on your inward supply. So when we are purchasing from our supplier, we have already paid a GST amount. When we are selling to our customers, that is our recipients, we are going to collect tax, GST, that is called as output tax. So this output tax which is collected from this value, the input tax already paid previously to the supplier, to our supplier, is deducted. And that's why it is called as the net amount. So output tax minus input tax is called as the net tax amount. Let's take an example for that. If your input tax which you have already paid to our supplier is rupees 350, and what we have collected from our customers, let's say, is rupees 425, then the output tax minus input tax, that is 425 minus 350, rupees 75 net tax is payable. So when we are claiming a deduction of this 350 rupees from the output tax that we have collected from our customers, that is called as input tax credit. So whatever input tax that you have paid, you are now claiming a credit. You are now claiming a reduction. You are now claiming a deduction. So that deduction of input tax is called as input tax credit. So the net tax that will be payable to the government is 75. Simple point, 350 rupees has already been paid to our supplier. 425 is collected from our customer. So difference of the amount is we are supposed to pay 425, but out of that 350 rupees has already been paid to our supplier. So we have to pay only the balance of the amount, that is difference of the amount, 425 minus 350, that is 75 rupees to the government. So that is about the concept of input tax credit. Very important. When can an SSE or a registered dealer claim input tax credit? Very, very important. For any supply of goods, whether the regular goods or whether capital goods, you can claim input tax credit only if it is used for business purposes. If it is used for personal purpose, input tax credit is not available. So input tax credit is available only if it is used, if the assets or for that matter goods or raw materials is used for business purposes. If it is used for personal purpose, input tax credit is not available. So let's be very clear with that. Next concept is who cannot claim input tax credit. Very important concept. Input tax credit is not available on goods and services exclusively used for. I mentioned about something called personal use, but before that, suppose if we are talking about exempt supplies. So when I am making a purchase, when there is an inward supply from my supplier, if it is an exempt supply, you can assume over here, there is no GST at all. There is no question of input tax credit. So on exempt supply of goods or services, no input tax credit is available. Second, which I mentioned, if the goods or services that are availed, if it is for personal purpose, not for business purpose, input tax credit cannot be claimed at all. Third, composite dealers registered under Section 10. We have discussed in detail under GST in Pictures series number 5, I believe. Composite dealers, when they are making a purchase, they pay input tax. But when they are supplying, when there is an outward supply from composite dealers, they are not supposed to collect GST from their customers. They cannot issue tax invoice. They are supposed to issue bill of supply only. So point is very clear. If a dealer, if a supplier is registered under Section 10, that is under composition scheme, a composite dealer cannot claim input tax credit. Remember this. Next is supplies for which input tax credit is specifically not available. So if there are any such items where input tax credit is not available, such SSEs or such suppliers cannot claim input tax credit at all. So categories, exempt supplies of goods, you can take nil rated also, no input tax credit. Then if the goods or services are used for personal purpose, no input tax credit can be availed. If the SSE is registered under composite scheme, that is under Section 10, such SSE or such dealer or such supplier cannot claim input tax credit. And if there are certain supplies for which input tax credit is specifically not available, such dealers or dealers in such goods cannot claim input tax credit at all. Now, coming on to very, very important point, that is conditions for claiming input tax credit. So we will take into account 6 very important conditions for claiming input tax credit. First, very important is dealer should be in possession of tax invoice. Very important. Tax invoice tells you if you have made a purchase from your supplier, you have paid GST. So if you have paid GST to your supplier, only then the supplier can issue tax invoice. So the difference between tax invoice and bill of supply is simple. Tax invoice will contain the GST amount, whereas bill of supply will only show the plain value of the goods, no GST at all. So if an SSE or a supplier or a registered dealer has to claim input tax credit, One of the important condition is such a dealer should be in possession of tax invoice. That's very, very important. Second, said goods or services have been received and not receivable. So goods or services have been received. That's another very important condition for claiming input tax credit. Third, returns have been filed. Both the supplier as well as the recipient have filed their returns. That is a very important concept. If returns are not filed, there is no question of claiming input tax credit. For example, there is an inward supply, say from my supplier worth 1 lakh rupees, and I have paid GST at 12%. That is 12,000 rupees GST has been paid. Same goods, let's say I am selling it to my customer. There is an outward supply from my side. Now, very important one, if I have to claim input tax credit, it is very important that my supplier has uploaded the invoice, so that when I upload my invoice, the invoices matches. Only when there is a matching of invoices, input tax credit already paid to my supplier can be availed. So returns have to be filed. That is very, very important. That is from both the parties' point of view. If any of the party does not file returns or does not upload invoices, input tax credit cannot be availed. Next very important condition, tax charge has been paid by the supplier to the government. So whatever input tax that we have already paid to our supplier, the supplier has deposited it with the government, the central government exclusively if it is IGST, or a portion of CGST and SGST to central government and state government 50% respectively. So it's very important, whatever input tax has been paid to my supplier, such a supplier has already deposited that GST amount with the government. That's the fourth very important condition for claiming input tax credit. Next, if the goods are received in installments, in parts, not in lump sum, not together, then input tax credit can be claimed only when the last lot is received. If the goods are collected in installments, input tax credit will be availed only when the final installment of goods is made available to the recipient. So before that, the recipient cannot claim input tax credit at all. So if the goods are received in installment, ITC can be claimed only when the last lot is received by the recipient. So if one lot is still pending, one installment of goods is still pending, input tax credit cannot be claimed by such a recipient. Last condition, very, very important, is pertaining to more so capital goods. Capital goods are nothing but assets, say machinery, say furniture. If these assets are purchased and if GST amount is not included for the calculation of depreciation on such assets, then input tax credit can be availed. But if the depreciation is calculated on both the cost as well as the GST amount, then input tax credit cannot be availed. So let's be very clear. We will take an example. No input tax credit will be allowed if depreciation has been claimed on tax component of the capital goods. So in simple, if on GST amount depreciation is calculated, then no input tax credit will be available. Let's understand this with the help of an example. Say input tax credit on capital goods. So as I mentioned, capital goods are nothing but assets which will be used in manufacture of items, goods. So now, very important, let's take example. If the cost of capital goods is 15 lakh and the GST is 12% and it amounts to 1,80,000. 12% of the taxable value or transaction value, 15 lakh works out to 1,80,000. Now, very important point. If depreciation is calculated only on the cost of the goods, only on the cost, excluding this GST amount, then very, very important, input tax credit can be availed. So the supplier can claim input tax credit. I mean to say the SSE can claim input tax credit. Now, if depreciation is calculated on 16,80,000, that is 15 lakh the cost of the goods and 1,80,000 the GST amount. So if the SSE or supplier is charging depreciation on 16,80,000, that means to say on this GST amount also depreciation is calculated or this amount is included and depreciation is calculated at that time, input tax credit cannot be availed. So no input tax credit will be given if depreciation is calculated including the tax component, that is the GST component. If it is calculated only on the cost of the goods, input tax credit can be taken. But if it is calculated on 16,80,000 rupees, input tax credit cannot be availed. This is a very important point as far as conditions for claiming input tax credit is concerned. Now, how does this GST system work and how do we claim input tax credit? I should say this is the most critical slide of this concept of input tax credit. Let's understand this with the help of an example of a supply chain. Say manufacturer is selling goods to wholesaler, wholesaler is selling goods to a retailer, and retailer is selling goods to a customer. So let's understand how do these businesses, manufacturer, wholesaler, or retailer, claim input tax credit if there are, if any. Let's take example. The cost to the manufacturer is 900 rupees. Manufacturer is adding his share of profit of 100 rupees. So selling price to the manufacturer is 1000 rupees. So very simple point, selling price to the manufacturer will become the cost price to the wholesaler. Let's be very clear. The cost to the wholesaler will become, the selling price of the wholesaler will become cost to the retailer, and the selling price of the retailer will become the cost to the customer. So let's come back again. So cost is 900 rupees, profit is 100 rupees. So selling price works out to 1000 rupees. Let's assume that the GST rate is 5%. So 5% is calculated on 1000. It works out to 50 rupees. So our focus will be on this GST amount only. Let's not focus on these numbers, but it is required for understanding. Now that means to say the wholesaler will pay 1050 rupees to the manufacturer. And in this 1050 rupees, 50 rupees is the GST amount. So wholesaler is paying 50 rupees input tax to the manufacturer. So this 50 rupees the wholesaler is paying, it is included right here. So from the wholesaler's point of view, this 50 rupees is called as input tax. From the manufacturer's point of view, this 50 rupees is called as output tax, because for the manufacturer, it is an outward supply. From the wholesaler's point of view, it is an inward supply. So this 50 rupees is input tax to the wholesaler. Let's understand. So as I mentioned, selling price to the manufacturer will become cost price to the wholesaler. So cost to the wholesaler is 1000 rupees. I'm just assuming that the wholesaler is adding his share of profit of 100 rupees. So selling price now is 1100 rupees from the wholesaler's point of view. GST is 5%. We are keeping it same. So 5% of 1100 will be 55 rupees. So the retailer is supposed to pay 1155 to the wholesaler. And in that 55 rupees is the GST amount. So the retailer pays GST of 55 rupees to the wholesaler. Now let's understand. This 55 rupees from the wholesaler's point of view is output tax, because on outward supply from the wholesaler's point of view, there is this 55 rupees collected by the wholesaler. Whereas from the retailer's point of view, there is an inward supply. So from retailer's point of view, this 55 rupees will become input tax. Let's be very clear. So selling price to the wholesaler will become the cost price to the retailer. So cost price to the retailer is 1100 rupees. Let's assume retailer is adding his share of profit of 100 rupees. So I've kept 100 rupees as profit in all circumstances. So let's not worry about it. So the selling price to the retailer would be 1200 rupees. On that GST amount is 5%. We are keeping the rate at 5%. So 5% of 1200 will be 60 rupees. That means to say the customer will pay 1260 rupees to the retailer. And in that 1260, 60 rupees is the GST amount that the customer will pay to the retailer. And as far as customer is concerned, cost to the selling price to the retailer will become the cost to the customer. So it is 1200 rupees plus this GST amount of 60 rupees. So total amount that the customer will pay to the retailer is 1260 rupees. And out of that 1260, 60 rupees is the GST amount that the customer has paid to the retailer. So from the retailer's point of view, this 60 rupees is output tax because it is on outward supply of goods that the retailer is collecting this 60 rupees. Whereas customer, it is for final end user. So customer is not going to sell it further. So there is no question of input tax credit over here. Let's move further now. So as I mentioned, this 50 rupees to the wholesaler is output tax. From the wholesaler's point of view is input tax. From the manufacturer's point of view, it is output tax. So wholesaler pays GST 50 rupees to the manufacturer, and this 50 rupees is input tax from the wholesaler's point of view. Now, very important, the net tax from the wholesaler's point of view is he has collected 55 rupees from the retailer, which is output tax. Output tax is 55 rupees, whereas he has paid 50 rupees to the manufacturer. This is input tax, and this 50 rupees is now deducted, and the net tax that the wholesaler has to pay to the government is only rupees 5. So this 50 rupees is right here, and this is the 55 rupees that we are talking about. Let's look at it from the retailer's point of view. Retailer has paid 55 rupees, to the wholesaler. So this 55 rupees is input tax to the retailer, that is 55 rupees. Whereas the retailer has collected 60 rupees from the customer. So the net tax point from the retailer's point of view will be output tax minus input tax, that is 60 rupees, which is collected from his customer, minus 55 rupees, which he has already paid to the wholesaler. So here we have that 60 rupees, which he has collected from customer, which is output tax, and this 55 rupees, which he has already paid to the wholesaler over here. So the net tax that the retailer will have to pay is 5 rupees. So let's get the numbers right now. Wholesaler has collected 50 rupees. The wholesaler will deposit the entire 50 rupees with the government. So GST paid by the manufacturer is 50 rupees, which the wholesaler has paid, the manufacturer has collected. So manufacturer will deposit 50 rupees with the government. The wholesaler will deposit this net amount of 5 rupees only, because he has already paid 50 there to the manufacturer. He can claim a deduction from 55 rupees, which he has collected from the retailer. So net tax that the wholesaler will have to pay to the government is only rupees 5. From the retailer's point of view, again, the net tax will be 5 rupees only. That is 60 rupees, which he has collected from the customer, minus 55 rupees, which he has already paid to the wholesaler. So once again, over here, the retailer will pay a net tax of 5 rupees only. So let's total. 50 rupees GST will be paid by the manufacturer. 5 rupees GST net amount will be paid by the wholesaler. 5 rupees net amount will be paid by the retailer. So total amount of GST paid to the government is 50 rupees plus 5 rupees plus 5 rupees, that is total 60 rupees. And ultimately, if you look at it, this entire 60 rupees is borne by the customer. So this is a very, very important point. No matter which tax we are talking about, whether we are talking about direct tax or whether we are talking about indirect tax and in that GST, ultimately, it is the customer who is supposed to pay the GST amount to the government. But in the supply chain, part of the GST amount is paid by the manufacturer, a part of it is paid by the wholesaler, and a part of it is paid by the retailer. And the retailer is going to collect the entire amount from the customer. So ultimately, we say it is the customer who is supposed to pay GST amount to the government. So though the customer doesn't pay directly to the government, a part of it by wholesaler, part of it by retailer, part of it by manufacturer. That's why the incidence is on one person, the levy is on another person. That's why the concept of GST is called indirect tax. So it is not paid by the customer to the government directly. There is an intermediary, there is a manufacturer, there is a wholesaler, there is a retailer, and through them, GST amount is paid. That's why GST comes under the category of indirect taxation. So I hope this concept of input tax credit and how does this concept of GST system work is very, very clear. Now, coming on to the last concept in this, and that is application of Rule 88A, utilization of input tax credit. Now, there will be number of transactions that the wholesaler and retailer are going to go through. So they might have paid input tax for which input tax credit will be available. Now they are supposed to pay net tax, that is after deducting input tax credit. How do we calculate? How do we make use of this input tax credit as far as different types of GST is concerned? That is what we are going to understand. Now, input tax credit on account of IGST, integrated goods and service tax, say must be utilized completely to set off IGST liability and thereafter CGST, SGST or UTGST liability in any order or in any proportion. So what is it saying is whatever IGST credit is available, that IGST credit must be completely utilized first to pay the IGST liability, then to pay the either the CGST or SGST liability in any proportion, in any manner. But what we will do is we'll simplify. We'll make it 50% proportion, both CGST and SGST or UTGST. So after making use of the input tax credit in IGST account, input tax credit available under CGST and SGST or UTGST can be utilized. So let's understand this. What is the order of utilization? See, I'm going to use certain numbers in this particular chart, and based on these numbers, that is what we are going to practice. Input tax credit on account of IGST. So you have already paid input tax credit IGST. Say there is an interstate inward supply from your side and IGST has been paid. So first thing that you are going to utilize this IGST credit will be to pay output liability as far as IGST is concerned. Once that is IGST liability is completely paid off, if there is still some IGST credit available, then that amount will be paid or utilized to settle both CGST and SGST or UTGST liability. Now it is said in any order and in any proportions. What we'll do is we will keep it at 50% each. Let's take example. IGST credit is 20,000 rupees. Suppose output tax liability of IGST is 15,000 rupees. So 15,000 rupees is settled from the credit. 5,000 still remains, and this 5,000, 2,500 we will settle CGST liability. 2,500 will settle SGST or UTGST liability. So what I'm trying to say is, before you move further from IGST credit, you have to completely utilize IGST credit. That is very, very important. It must be exhausted mandatorily. This is very, very important, except for in case of exports. The government has made it very clear. GST Council has made it very clear that IGST credit must first be utilized to settle all types of liability, starting with IGST liability. Then CGST or SGST in 50% proportion we will take. Then if there is a CGST credit that is available, CGST credit will first be utilized to set off CGST liability. This is number 4. If some amount CGST credit remains, IGST liability can be settled. But remember, CGST credit cannot be used to set off SGST or UTGST liability. It is not permitted at all. The third is SGST or UTGST credit can first be utilized to settle SGST or UTGST liability. First will be SGST or UTGST liability. After settling, if still some SGST or UTGST liability credit remains, you can settle IGST liability can be settled. So SGST credit cannot be used to set off CGST liability. This is a very, very important point. Let's understand this application of these numbers with the help of an example. So as I mentioned, it must be exhausted mandatorily except in case of exports. So if the SSE is into exports, then IGST credit can be retained, because as far as exports are concerned, IGST credit becomes very, very important. Let's take example of this utilization of input tax credit. Let's say if a taxable person has the output tax liability, so there is a IGST liability of 500, CGST liability of 1,000, SGST liability of 1,000. And the credit available, IGST credit is 2,000 rupees, CGST is 150, SGST is 150. Then the setup shall be done as follows. So one point is very clear. This 2,000 must be utilized first, compulsorily. Now, as far as IGST is concerned, it's only 500. So from 2,000 credit, if I take out 500, it will remain with 1,500. 1,500 will now be divided between CGST liability and SGST liability as 750 rupees each. So let's look at this particular example. First, we record the types of tax. Second column is what is the input tax credit available. So IGST credit available is 2,000 rupees. CGST credit available is 150 rupees. SGST credit is 150 rupees. Third column we will discuss later. Let's come this side. There is an output tax. Output tax is nothing but the liability which is to be paid. You know, how much is the amount that is collected on outward supply. So IGST liability, there is 500 rupees. CGST liability is 1000 rupees and SGST liability is 1000 rupees. Then we take less input tax credit. How do we calculate that? So first, as I mentioned, this 2000 rupees which is available, credit IGST, will first be used to settle IGST liability, which is 500 rupees. So from 2000, if I take out 500 rupees, I remain with 1500 rupees. So that 1500 is now apportioned into 750 and 750. So 750 rupees CGST liability will be written off. 750 SGST liability will be written off. So what does this mean? This IGST credit which is available right here will first be completely utilized to settle all kinds of liabilities, starting with IGST liability first. Once that is done, then the remaining amount we can assume it can be in any manner, in any proportion, but for convenience sake, we will take 50%. So 50% of 1500 is 750 and 750. So 750 and 750 liability will be settled. Next, we have CGST credit that is available is 150. Point to note, so I settle 150 CGST liability. Then SGST liability is 150. Entire 150 is utilized to settle CGST, SGST liability right here. So total input tax credit utilized, we will call it as B. So in a total, it is just this input tax credit 500 rupees. Here we'll take 750 plus 150, 900 rupees. Here we'll take 750 plus 150, 900 rupees. So let's call this as B. This was A. So net GST payable is A minus B. So 500 less B 500 is nil. A, as far as CGST was concerned, was 1000 rupees. B is 900 rupees. So A minus B, 1000 minus 900 is 100 rupees. Similarly, SGST, A value was 1000 rupees minus B. B value is 900 rupees. So net GST payable, SGST payable is 100 rupees. Input tax credit carried forward, that is column 2 minus column 3. So as we see over here, 2000 was IGST credit available and this 2000 was completely utilized. So column 2 minus column 3 for IGST is nil. 150 was CGST credit that was available. Utilized CGST to settle liability was 150. So 150 minus 150 is nil. And SGST liability, which was 150, credit which was available, and liability settled was 150 rupees. So column 2 minus column 3 for SGST is also nil. So I hope utilization is very clear. So one basic takeaway from this is IGST credit of this 2000 rupees in this example must be completely utilized before you make use of CGST or SGST credit. So IGST credit must first be completely utilized. It must be completely exhausted before we avail the credit to settle liability from CGST or SGST output tax is concerned. So first completely exhaust this, then we will go to these numbers to settle that. Let's take another example. Supplier has output tax liability. Supplier, let's say, has output tax liability, say of rupees 70,000. Output tax liability, IGST is 70,000, CGST is 20,000, SGST is 20,000. And the credit available, that is IGST credit available is 85,000, CGST credit is 25,000, SGST credit is 25,000. So we'll calculate the net GST payable. So what we will do is, first we will enter these numbers. So as we see, credit available as far as IGST is concerned is 85,000. Then CGST credit that is available is 25,000. SGST credit available is 25,000. So this is done. So these are the credits that are available over here. Now, what is the IGST, CGST and SGST liability output tax available? So IGST liability is 70,000. So I record 70,000 here. CGST liability is 20,000. So 20,000 is recorded here. SGST liability is also 20,000 rupees. So we have got the value A, that is output tax. Now, first what we will have to do, we will have to make use of this entire 85,000 first. Now, how much is IGST liability? IGST credit will first be utilized to settle IGST liability, which is 70,000. So I record 70,000 here, and in bracket I record over here 70,000 is utilized. 70,000. So how much will remain? Out of 85,000, 70,000 has been utilized. Means 15,000 will remain. So this 15,000 will now be apportioned into 50%. So 7,500 will be CGST liability, which will be settled, and 7,500 SGST liability will be settled. So I record over here 7,500 rupees to settle CGST, 7,500 to settle IGST, SGST, I beg your pardon. So 70,000 plus 7,500 plus 7,500 will make it 85,000. So this 85,000 is completely utilized. Now, so this 70,000 and 70,000 will become nil. So I can record that as nil. Total ITC utilized is 70,000. So I can record this as 70,000, and A minus B, this is A and this is B. So A minus B is nil. A minus B is nil. Let's come here now. Out of 20,000 worth CGST liability, 7,500 liability has already been settled. So how much more is needed? 12,500 more is needed. And this 12,500 will now be utilized from this particular number. So 12,500 is utilized out of 25,000 rupees. So that's how the CGST liability is settled. Now, if I take less input tax credit, 7,500 plus 12,500, this works out to 20,000 rupees. And A minus B, 20,000, A is 20,000, B is 20,000. So net GST payable as far as CGST liability is concerned is nil. Let's look at SGST now. SGST liability was 20,000 rupees. 7,500 IGST credit has been utilized to settle. So we need a further 12,500 rupees only SGST liability. And this can be brought from this particular number, 25,000, which is available. So out of 25,000 SGST credit, we are making use of 12,500 rupees. So 7,500 plus 12,500 would work out to 20,000 rupees. So A value is 20,000, B value is 20,000. So A minus B, net GST payable as far as SGST is concerned is also nil. Now let's come to the last columns, last row now. Input tax credit carried forward. So one point is very clear. When we are completely utilizing the IGST amount to settle first IGST, then CGST and SGST liability, usually input tax credit carried forward as far as IGST column usually will be nil. Because sometimes the IGST amount credit will be more than the total liability, output tax liability under IGST, CGST, SGST. At that time, this particular column will show certain number. Let's come to CGST input tax credit carried forward. So column 2 minus column 3. Column 2 is 25,000. Column 3 is 12,500 rupees. So 12,500 will be input tax credit. That is for CGST carried forward. Let's come to SGST now. Input tax credit carried forward. Column 2. Column 2 for SGST is 25,000 minus column 3. That is amount used for set off is 12,500. So input tax credit carried forward as far as SGST liability is concerned will also be 12,500 rupees. So I hope this particular example is clear. So first what we do is we have the columns ready, type of tax, input tax credit available, amount used for set off, particulars, IGST, CGST and SGST. These are liabilities to be settled. So output tax which we are supposed to pay is 70,000 IGST, 20,000 CGST and 20,000 SGST. Credit available under IGST is 85,000, that is input tax credit available. CGST is 25,000, SGST is 25,000. Then we take less input tax credit. So first we will utilize IGST credit that is available. We have 85,000. From 85, first we are going to settle this 70,000 rupees. So 70,000 is settled. So if from 85,000, if I take out 70, I remain with 15,000. And this 15,000 for convenience, I am apportioning in two parts, 7,500 each. So CGST and SGST liability settle 7,500 each. So 85,000 is completely utilized. Coming on to CGST liability, credit available is 25,000. But how much amount do we need to settle CGST liability? Out of 20,000, 7,500 liability has already been paid. We need another 12,500 only. So out of 25,000, 12,500 is utilized to set off. So 12,500. Similarly, when it comes to SGST, 7,500 liability has been settled through IGST credit. We need another 12,500 credit amount only to settle SGST liability. So 12,500 is utilized of this. So if I take the columns B, 70,000, this is B. Total input tax credit for CGST is 20,000 and for SGST is 20,000. So A minus B, 70,000 minus 70 is nil. 20,000 minus 20,000 is nil. 20,000 minus 20,000 is nil. So net GST payable is nil in all three kinds of taxes. Now, as far as carried forward input tax credit is concerned, out of 25,000, we have utilized only 12,500. So 12,500 CGST credit will be carried forward. Similarly, SGST credit out of 25,000 credit available, 12,500 only is utilized. So 12,500 only will be carried forward as far as SGST credit is concerned. Now, as far as IGST credit is concerned, 85,000 was the amount. Entire 85,000 has been utilized over here. So the amount of IGST credit carried forward will be nil. So I hope this example on input tax credit is utilization of it as far as rule 88A is concerned is very, very clear. So thank you for your company. So if you'd like to connect, collaborate, my email ID and phone number is available right there. So once again, I request you to please subscribe to the channel. Do share with all the people who need awareness on this particular subject and also in-depth knowledge as far as GST is concerned. And do comment as well. So thank you for your patient hearing. Thank you once again.